Well, the street has factored in a rate cut from Urjit Patel in the upcoming monetary policy. That is according to a poll conducted by CNBC TV18 from across treasury heads and economists from across India's top banks. Ritu Singh brings us more on that report that we've done. Ritu, over to you.
The excess cash parked with banks following the note ban and the rising global crude oil prices. These are just a few of the things that will dominate the Monetary Policy Committee members' minds as they meet to decide the future trajectory of RBI's repurchase rates. A CNBC TV18 poll of top treasury heads and economists indicated that 70% expect the RBI to cut the repo rate by 25 basis points. The remaining 30% believe the RBI may choose to pause. Despite the liquidity surplus with banks, cash reserve ratio is expected to remain unchanged. However, even this repo rate cut may not bring cheer to consumers, as the big bankers have already ruled out a lending rate cut irrespective of the RBI decision.
The budget and the contained fiscal deficit is a positive thing. Inflation being lower is a positive thing. So the expectation of rate cut is there, but I would say banks have transmitted the cost of fund reduction at this point of time, and therefore further avenue for further reduction in interest rate seems less likely.
I think currently for the customers it's the lending rate that is important, and the lending rate has already come down.
RBI's policy statement will be more important for its growth and inflation estimates. Half our respondents expect RBI to maintain the current year's growth or GVA estimate at 7.1%, and the remaining expected to be lowered to 6.6 to 7%. Next year's GVA forecast is seen between 7.1 to 7.5% by a majority of the respondents. 60% expect the 5% CPI target by March 2017 to be revised downwards to 4.5 to 4.9% levels. Also, a majority expect the RBI's FY18 inflation forecast at 4.6 to 5%. Most respondents do not expect the RBI to give a timeline for achieving that 4% inflation mark. But if RBI does specify FY18 as the timeline, then 70% expect no further rate cuts. In Mumbai, Ritu Singh.